MicroStrategy just dropped $21 billion to buy more Bitcoin after losing $4.2 billion last quarter. Welcome to Protocol Pulse, your go-to place for Web3 happenings. I'm your host, PBX, bringing you the digital revolution that nobody ordered, but everybody's getting served. Let's dive in. Formerly MicroStrategy, the company now known as Strategy, very subtle, just announced a $21 billion stock offering to buy more Bitcoin. Yes, even after a $4.2 billion loss in Q1, they're tripling down. Operating expenses jumped nearly 2,000% because apparently running a Bitcoin maxi corporation means numbers are just theoretical. Their CEO, Saylor, says they'll buy over 300,000 Bitcoin with that new cash. Oh, and they've got $43.5 billion in Bitcoin just sitting around. That's not a company. That's a hedge fund with a software side hustle. Coinbase nukes Move token. Move over. You're suspended. Coinbase is yeeting the Move token off of its platform by May 15th. Why? Because apparently the token couldn't meet listing standards, which ironically might be the first time in shitcoin history someone's used the term standards. Move tanked 14.5% faster than a VC-backed Metaverse startup. Turns out Movement Labs allegedly signed a sketchy deal with a market maker back in 2024. The kind of deal where you wake up and your token value is hanging out with Terra Luna in the afterlife. Now a third-party cybersecurity company named Groom Lake is digging into it. Groom Lake? That sounds like a place where you would find alien bones or SEC secrets. Anyway, check your bags. And maybe check your ethics. Morgan Stanley eyes crypto. From boomers to Bitcoin, E-Trade goes blockchain. Morgan Stanley just said, hey, what if your dad could trade crypto on the same platform where he buys GE stock and yells at charts? They're planning to launch crypto trading on E-Trade by 2026. That's right. The same Wall Street titans who once called Bitcoin tulip mania are now opening the gates. Slowly. Awkwardly, but with lots of compliance paperwork. Crypto ETFs and futures already exist for rich clients. Now it's time for retail to rage in. Morgan's partnering with established crypto firms. Because nothing says, we believe in decentralization, like a partnership with a 90-year-old investment bank. Worldcoin becomes world. Scan your eyeballs, get paid. Totally normal. Worldcoin. Sorry, it's just world now. Like MicroStrategy, micro. It officially launched in the US this week. And here's how it works. You stare into a glowing metal orb. It scans your eyeballs. And in exchange, you get tokens and a passport to the metaverse. No way that could ever go wrong. As mentioned earlier today, it is now available in 6 innovation hubs. Atlanta, Austin, LA, Miami, Nashville, and San Francisco. Basically anywhere the average rent is a full ETH. World partnered with Visa for a WLD debit card and is even testing integrations with dating apps like Tinder. Because what's sexier than biometric identity verification on your first date? Swipe right if you're verified as a real human with orbital approval. Honestly, at this point, if you're not selling your soul for airdrops, are you even living? And in breaking news, the DOGE team just casually dropped the mother of all red pills. Apparently, the US Treasury was blowing through $5 trillion a year with no labels, no itemized receipts, just a giant middle finger to you and me. Accountability? Never heard of it. Jail? That's for poor people and people who don't have their own taxpayer-funded NGOs. Meanwhile, if you send someone $600 on Venmo, the IRS will have a sniper on your rooftop by sunset. Now imagine if we had a system, I don't know, where spending was on-chain, public, and immutable. Nah, we'll keep printing JPEG coupons backed by debt and empty promises. Seems to be working just fine. Meanwhile, Web3 rolls on, where accountability might still be optional, but at least it's not hiding behind national security and Excel spreadsheets from 1973. Stay sharp. Stay decentralized. This is Protocol Pulse. No chill. No censorship. Just code and consequences.